Market rallies above the 100-day moving average as earnings season gets underway. Let's get into the numbers this morning. First of all, the S&P did wind up holding the 100-day moving average yesterday, so the support level continues to remain intact here over the last couple of days. This is a good sign here, and potentially with market futures pointing up this morning, that suggests that we'll not only clear this 100-day moving average, but begin to work our way back towards that all-important 50-day moving average. Again, if we're going to rally into the end of the year, it's going to be critical that we get above these levels of resistance and move further. One of the problems short term, of course, is that we're rapidly eating up this money flow buy signal that we have. That's moving back towards overbought conditions in the short term. So again, upside likely limited here. Probably the best idea is to use this rally as an opportunity to reduce some risk, rebalance your exposures and portfolios, particularly if you didn't like this decline that we had over the last couple of weeks. You have too much risk in your portfolio, so use this opportunity to rebalance that structure. Let's get into some of the earnings that are coming out this morning from the major banks. Most of these banks have been reporting better than expected earnings on lower loan loss reserves as well as share buybacks, which have been boosting their bottom line EPS. We noted this yesterday with JP Morgan. Also this morning, Bank of America, much the same way here, coming down yesterday, touching the 20-day moving average. Reported earnings that beat estimates this morning. Should see a little bit of a bounce here with the overall market being up. But again, as we continue to look at other banks as well, let's go to the main criminal enterprise of banking, Wells Fargo, which continues to really slide sideways here, has not really been doing a whole lot. Of course, they consistently keep getting caught by screwing over their customers, but again, hasn't really impacted their banks much in terms of allowing these prices to rise here. For Wells Fargo, it's been a real challenge here to generate profitability when you can't steal more money from your customers. Morgan Stanley, of course, also has been performing a little bit weak here as of late. Again, money flow is very negative in Morgan Stanley, of course. They were announced better than expected earnings this morning. Expect to see that stock move up. But again, not a lot of potential here with Morgan Stanley. A lot of overhead resistance here, so a good opportunity potentially here to reduce some risk of exposure. One thing to watch here is a break of 56.5 on Morgan Stanley. If it does violate that support level, there's not a lot of room here or support down to the 200-day moving average. So again, be a little bit cautious with that position. CitiGroup also announcing better than expected earnings today. This another stock has not been performing well as of late, holding the 200-day moving average right now on a major money flow sell signal here. So again, a lot of weakness here at this point. Stock may perform a little bit better today, but a good opportunity to probably exit this position at some point and look for a stronger holding somewhere. JP Morgan, Goldman Sachs, those financial sector stocks look better on a performance basis than Citigroup right now. And lastly, on the healthcare front, UnitedHealthCare announcing earnings this morning as well, doing well. Bounced off the 200-day moving average, back above the 20-day moving average. Stock has been trying to recover here. Money flows remain negative. This has really been kind of one of the key drivers of a lot of stocks here lately, is that money flows remain negative in these stocks. And again, overall, they have not been performing that well. UnitedHealthCare in that bucket right now. But again, one thing we like going into the end of this year and particularly into next year, if we do have slower economic growth, healthcare stocks should start to perform better. Watch this position here as long as support holds. There's nothing too much to be concerned about here, but a move above the 50-day moving average would be a good opportunity to begin adding this position back to your portfolio as well. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you tomorrow.